My name is Jeff Gibby. I'm right now in Salt Lake City, Utah. It's a little bit of a rainy day. And just to tell you a little bit about myself, I guess that's a good place to start. I've worked for MetaStock for most of my adult life. I started here when I was 23. I just hit 40 this year. And it's been a great job. I absolutely love working in the markets. And so just to kind of talk a little bit about kind of my career here, just so you know who you're talking to. I started in inside sales and did that for about 10 years. It was a very fun experience. I very much have always enjoyed the market. I always have enjoyed talking to traders about what they're doing. About 10 years ago, I kind of went into the business development, and so and now I'm kind of in charge of the team here for business development. And a lot of what we do, and it's been a really great gig. I get to talk to a lot of the people here at MetaStock that we work with that are very, very good traders that kind of have a good strategy and a style for trading. And I've been able to, as a result of that, talk to a lot of people that are very, very good at the market. It's some people that I really, really enjoy working with, and travel the world. My first assignment, so to speak, after I kind of took the job was training a bunch of Saudi sheiks in Saudi Arabia. It's just been a great gig. I've been able to learn a lot. I've absolutely loved it. It's a great culture here. And so very much that's kind of the background on me. It's been a lot of fun. I don't profess to be an expert in the market, but I know a lot of different trading strategies, and we're going to talk a lot about kind of deciding and testing and evaluating market strategies to find, well, the strategy that works for you. So anyway, that's enough about me. Let's go ahead and get into some more fun stuff like the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Whew. And on another note, I don't have any series licenses. I'm not going to tell you what to be buying or what to be selling today. Really, I think the best part about trading is the fact that you have the ability to kind of have a really good trading plan in place. And so what I'm going to do today is help you evaluate different indicators and different methodologies and different studies to find something that will work for you. And when I say work for you, what I mean is like how often do you want to be trading? How much risk are you willing to take versus the reward that you're getting? And the things that you should be looking at while you're actually evaluating the different systems and methodologies and that kind of stuff. I want to talk to you a little bit about the company I represent. If you haven't heard of MetaStock, you should look us up. We've been rated #1 in our price category for, I think this year was the 23rd straight year in a row. And the tools that we design and work, we cover kind of a wide gamut. We sell institutional quality data feeds at a retail price point. So if you're interested in news and fundamentals and that kind of stuff, we definitely have that available, and we get it straight from Reuters. So the products that we sell at Reuters are products that have been designed for upwards of $1 billion. They're very, very cool. I get people signing up for those products that are telling me that they're canceling much more expensive Bloomberg products. And so we do a lot of that. But our heritage has always been kind of in the technical analysis arena, which is really more what we're going to cover today. So there's our little award. We're very happy with it. I want to talk a little bit about, and we have enough people in the room today, but about technical trading. So we're going to kind of do a little bit of an overview of MetaStock, but really what we're going to talk about is the importance of trading with a plan and understanding a trading system that works. Well, I'm actually going to teach you about the MACD indicator today. The reason I do that is there's a lot of people that actually trade with the MACD, but they have no idea what it's doing. So I think understanding it, and I think in trading, if we understand what we're doing, we're a lot more confident in the decisions that we're making. If we understand what our drawdowns look like and that kind of stuff. So what I'm going to do, just for those of you that may be new to technical analysis, I'm going to actually teach you exactly all about a MACD system. And then what we'll do is we'll pull that into a stock and we'll test it against other trading methodologies, and we'll look at the drawdowns and the frequency of trading and kind of find a good fit. And really what I want to kind of impress upon you as we go through the class today is more the mentality and the methodology that you should be using. So we probably won't say, okay, well, this is the best methodology that works for Apple and you should start trading it, but understanding exactly kind of what you should be looking at when you're evaluating different strategies. So a quick question for the group. Whew, it's a lot of talk. It's a little bit early this morning for me, but I have a quart of coffee here, so as we get going we'll be doing better. But I normally ask this in our live classes, but in terms of professions, what do you think the studies say is the best profession for a trader? Can we get somebody to guess on that, or maybe actually even answer it? We'll see if somebody answers. We usually get like doctor or attorney, psychiatrist, those type of answers. Those are kind of the things that we're looking for. And I don't see anybody jumping in to answer that as a question yet. Maybe I'm looking at this wrong. Like, is always a possibility. Oh, here they are. Pilot is actually the answer we were looking at. Thanks, Jerome. A pilot, actually, and some of the best technicians I've worked with in the industry. Greg Morris is somebody I'm thinking of, and as an example, flew F-4 fighter jets in the war, and somebody that's gone on to be a great trader. A pilot is actually the answer. And then the follow-up to that question is why? Well, you know, here's why I think that is. And this certainly doesn't have anything to do with the study or anything like that, but because they have a plan. Okay? As traders, it's so, and I'm guilty of this. I have a whole story on Apple that I'm not going to go into, but as traders, when we trade on emotions, emotions are not our friend. I think you'd all agree with that. If we have a trading system that we know that has worked over time, and we follow that system, we're going to be a lot better off. So I really think it's important to trade with a plan when you're in the markets and when you're trading. The other question I ask as we're going through this in a live environment is, who are these guys? But it's Bill Dennis and it's Richard Eckhart. And these are the founders of the Turtle Traders. I'm sure a lot of you have heard about the Turtle Traders. It's a very interesting story. They were very famous traders. I think that was in the 70s, about the time I was born. Very famous traders in their day, very successful traders as well. And they had a gentleman's disagreement, if you would. I believe it was Richard Dennis didn't believe that you could teach people how to trade. He thought that it was totally a psychological thing, that you had to have a certain genetic profile and a genetic makeup. And so they decided to have a gentleman's bet. They put a lot of money into it. They actually put advertisements in the Wall Street Journal, Barron's, the New York Times. And they actually kind of went in and said, okay, well, we're going to actually test. We're going to bring in a bunch of traders. We're going to teach them our methodologies. And we're going to see if we can teach people to trade as successfully as we do. And so they did that. They placed the advertisements in the New York Times, the Barron's. They brought in a bunch of traders. They spent a couple of weeks training them, and it was a wildly successful experiment. It's probably the most famous, at least, trading experience that there's ever been. You've all heard turtle trading methods. And the results of that, actually Richard Dennis said in an interview later with the Wall Street Journal, was trading was much more teachable than I ever imagined. In a strange way, it was almost humbling. And then the other thing that he said, and I thought this was also more important, and it goes back to the importance of trading a plan, is you could publish his trading rules in the newspaper and nobody would follow them. The key to consistency is that discipline of having a plan. Anybody can make up a list of rules that are 80% as good as what they taught, but the consistency was what they would lack, or the confidence to stick to those rules even when things are going bad. That's particularly important if you're trading a turtle trade, because if you know anything about that system, it's a breakout system. And what happens with most breakout trades is that you get whipsawed. And I don't remember the exact statistics, but when you're trading the turtle trading system, or when they would trade it, almost 8 of their trades out of 10 would be actually losers. But the other 2 trades in that 8-10 ratio would make them extremely profitable. So the question is okay, well, how do we analyze and how do we make up a trading system? And what is a trading system exactly? And I go through kind of the MACD rules and kind of explain exactly what a MACD is for kind of people that are a little bit newer to the market and may not understand a trading system. I want to make sure that's clear so that we can understand what we're actually testing and what makes up the rules. So this is the example I like to give. It's Gerald Appel, very good technician, developed an indicator called the MACD. It's a very simple indicator if you understand what it's doing, and it's also a trend-following indicator. Okay, and I'm sure you've heard from different in the market. If you've listened to a webinar or 2 or 3, you've heard, well, the trend is your friend, or befriend the trend, or a rising tide lifts all boats, or any type of market cliche that you want to throw out there. Since it's a trend-following system, this is something that can help you measure the trend and kind of understand if it's a bullish or a bearish trend. Okay. Now, the calculation of the MACD is very, very easy. If you've seen the line on it, basically a MACD, I need to kind of clean up this slide a little bit. A MACD is a 26-period exponential moving average subtracted from a 15-period exponential moving average. So here in the MetaStock graph that we've got the 26-period exponential moving average. We've got the 15. If we were to take the value of the 15 and subtract it from the 26, what you're going to get is you're going to get the red line on here. Okay? And it's a great at kind of helping you understand where the trend is. As a trend accelerates and as it gets into kind of a more active area, what you're going to see is this MACD is going to start to rise. And the faster that it rises, the bigger your bullish trend is going to be. Likewise, when we get into a flat area in a stock like we have right here, what's going to happen is the distance between the MACD, or the size of the MACD, is going to shrink as well. So that's basically the way the MACD is calculated. There's quite a few different ways that you can trade them. And I'm going to teach you 3 today, or 3 trading strategies with the MACD. The line that you see on the MACD is just a signal line. It's a 9-period exponential moving average. I keep cutting out. Uh-oh. I just read a comment in the chat that I don't want to read. Okay, I'm going to keep going. Hopefully, what I would recommend is if you're having issues with sound, make sure you close down like Outlook and Skype and anything that's network heavy, because that'll generally help you with having a better bandwidth connection. If it's an issue for a lot of people. John corrected me. He said Gerald Appel used a 26 and a 12, not a 26 and a 15. I'll have to look at that. I'm pretty sure it was, well, you could be right. Don't accuse me of let's take a look at it when we get into the software. We'll actually go in and look at exactly what they used. You're probably right. It might have been a 12 and a 26. If so, I will update my PowerPoint and repent. So here we've got the 9-period exponential moving average is basically overlaid. Now, one of the ways that you can trade it is people call this a signal line because they use it as signals. So, for example, if our price crosses up above the signal line, that's indicative that the price of the security and the trend is starting to change. Okay, so right here we have where the MACD crosses right above its signal line. You'll notice my MetaStock chart is putting a MACD buy signal on the chart for you there. what our assumption is okay, the bearish trend that we've had is starting to reverse, and we anticipate the stock is starting to go up. So if we anticipate the stock is starting to go up, what's a strategy that would match that anticipation? Well, in that case, we'd either buy an option on the stock, or we buy the stock itself. But in this particular case, that's a signal cross. So that's one of the ways that we could trade it. And you'll notice that in the chart that I've got, and once we kind of go into the software, I'll show you how to attach this and how to look at it and how to verify whether it's 12 or 26. But when this happens, when this cross happens, you're anticipating that you're going to start to get more bullish. When it crosses back down below, again, when we start to get to the top of this trend here, and it crosses down below, you're going to get a sell signal because the market is topping and you're anticipating a bit of a sell-off. In this case, it came back up. It isn't perfect, but that's the way you would trade that. And since it is a very objective way of trading, it's also a very testable way of trading. In other words, at no point today am I going to say, okay, well, QE5 is going to phase out, and you need to be looking at kind of shorting the market. What we're looking at is we're looking at what's factored into the price and what we can quantifiably measure. So we're not trying to make armchair decisions on the fly. What we want to do is we want to find a strategy that works well over time and one that works well for the trading goals that we have. Let's go to the next slide, and I think pretty soon we'll jump into the software. Yeah, let's go ahead and do that. Let me go to the previous slide here. Boom. And let's just go ahead and get MetaStock loaded real quick. Have a view of diamonds. I actually have an open trade in that today, so I've kind of been keeping an eye on it. So here is the Apple chart. Okay, and again, let's just kind of take a look at this in MetaStock. If I wanted to add MACD, which I definitely want to do, what I'm going to do is I'm just going to find MACD right here. So I'll go ahead and pull this out of the indicator quick list. I'll go ahead and drop that in the chart, and I'm going to leave everything at the default settings. So I'll go ahead and click on MACD. Now I do want to change this to a histogram, so it's a similar view to the one that you're looking at in the chart. So what I'm going to do here is anytime you want to change something in MetaStock, it's really easy. You just double click on it. I'm going to go ahead and leave it as a blue line. So we'll go ahead and make that a blue line. I'm going to make the style of it a histogram. Okay. So now we've kind of got a bit of a closer view. Okay. Now, I believe what Gerald Appel actually used, I'm just going to pull it out. And anytime you have a question on an indicator in MetaStock or anything of that nature, what you can do is you can go to the Help button, and it's going to tell you. So you're right. In that case, I'm going to update my PowerPoint. He didn't actually use, and I don't really understand the concept of it, but he used a 0.075 exponential moving average and a 0.15 exponential moving average. And that's closest to a 26 period and a 12 period exponential moving average. In my brain, I was thinking 0.15 and 15 days, but actually that relates to closest to a 12 period moving average. So thanks for the correction. I'll make sure to update that in the slides. Okay, so let me go ahead and close that down. Okay, you notice, actually, before I do that, notice in here you've got all kinds of helpful information. This is just telling you the calculation of it. There's an interpretation here that'll kind of tell you exactly how you'd read the indicator, parameters, tips, those type of things. So if we click on interpretation, it's going to basically say a basic MACD trading rule is to sell when the MACD falls below its signal line. Similarly, a buy signal occurs when the MACD rises above its signal line. So we can very, very easily kind of go and get an interpretation and an overview and some tips for using that as an indicator. Okay. Now, if I wanted to, I was showing you how the buy and sell signals work in the MACD. The way MetaStock does that is through the use of an expert advisor. So what I'm going to do is I'm going to click on my expert advisor right here. And it looks like it opened on a new screen. Let me just see if I can grab it. Hopefully it's a screen that's active. No, let me do this real quick. So I'm having Oh, here it is. Okay, good. It was behind all my GoToWebinar stuff and that kind of stuff. So here we've got quite a few different options that we can pick from, but the one I want to show you is MACD. You'll also notice we have candlesticks, we have instructional commentary, we have momentum indicators, RSI, there's a ton of different ones. We're just going to kind of focus on MACD because that's what we're talking about. I'm going to go ahead and click on attach right here. I'm going to go ahead and click on close, and it's going to give me all of those buy-sell signals. I'm just going to zoom in a little bit on the chart here. So you'll see, okay, every time the signal crosses, it's going to kind of give us a little helpful buy signal. Here where it crosses back down below, it'll give us a sell signal, it'll give us a buy signal. If we had a new one on the chart, it's actually going to give it to us over here. And since this is an objective method, it makes it very, very easy to look at in terms of an indicator that you can use. Like, and what I mean by that is if I go back in time and if I wanted to test my trading plan, and again, I think trading plans are incredibly important, I'd say, well, okay, right here I would have bought. Okay, probably would have waited until the bar closed so the MACD signal was for sure there, and bought on the open right here at about 80 bucks. Okay, here where I would have gotten the sell signal to get out, I would have went ahead and gotten out of the open of the next bar, which would have been about 84 bucks. So in that case, did I make money on that trade? Yeah, I made about 4 points. So I could go through and very systematically figure out exactly how many trades I had that were winners, how many trades I had that were losers, and figure out exactly if this was a method that would work well. In this case with Apple, okay, here's another buy one. But we don't have to do that. What we want to do, and with MetaStock, what we have the ability to do is we can go in and say, okay, well, how well does this work with Apple? And what I would always remember, I started in inside sales, and as a new sales guy, I still remember it even though it was like about a lifetime and a half ago, we'd start to talk to people about the capabilities that are available in MetaStock. And I'd get a little bit carried away because I was very enthusiastic, very excited about it, but I'd start to talk about the 200 indicators that are in MetaStock, and the fact that you could get buy and sell signals, and the fact that it had 8 different charting styles. And there is a ton of capability in MetaStock, but for those people that are a little bit new to trading, they're like, well, do I have to learn about 200 different indicators to actually trade this successfully? Is that a requirement for what we need to do? And so really kind of the idea here is, as a trader and in life in general, I want to focus on the things that work. Tell me what indicators actually work on a chart, and then I'll learn about those. And that's the whole idea. We're not going to start at the A indicators and learn about each one. What we want to do, especially as a new trader, is to be able to focus our attention on those indicators that are actually helpful for the markets that we want to trade and that are helpful and relevant now. So what we do with that is we have the ability to say, okay, well, this is one of the methodologies that we have. Is it the best one for Apple? Is it the best one for all of the optionable stocks? How do we determine what our drawdowns are going to look like, how often we're going to be trading, that kind of stuff, so that we can focus on something that works for us? And it's very easy to do. I'm going to go ahead and click into the system tester actually and just show you exactly what we're going to be doing. Our system tester is a little bit unique. A lot of programs, they'll do system testing and system evaluation for you. Ours has about maybe 40 or 50 different built-in systems that you can test. MACD is one of them. And what I'm going to do is I'm just going to select a bunch of the ones that I know that are in the program for you. So right here we've got these performance systems that are based on different indicators and different functions. I'm going to go ahead and highlight all of them. Okay, and what I'm going to do is I'm going to come up to the MACD one. So we've got the MACD. What I don't want to do is the one that does optimization, because it just takes, the reason I don't want to do the one that does optimization is it takes a lot of diff time on it. If you know anything about optimizing, it takes a lot of variables and it kind of figures out what your best MACD settings and all that kind of stuff are. So what I want to do is just select a handful of these things. And maybe I'll pull in a couple of these other ones as well. Go ahead and click on Next. And with Reuters, you have the ability to, the coverage that we offer with Reuters is incredible. We have 182 different exchanges. So if you're interested in optionable stocks, you can have it. If you're interested in Forex, you're going to be able to do this. If you're interested in futures, you'll have it. We cover 182 different exchanges. If we don't have it, you probably don't care. So, and the thing that I can do is, I just clicked a little bit earlier, but I can actually have the ability to go in and say, and this is a fairly unique thing for MetaStock, is I could say, okay, test all of the optional stocks and tell me how well these particular systems I've selected work, and tell me what stocks that they work best with. That usually takes about 30 or 35 minutes, which when you're doing a webinar that lasts an hour is too long. So what I'm going to do is I'm just going to put in a few stocks. We'll do Apple. We'll do maybe IBM. If you have a stock you want to add, just ask for it. I'll throw it in here as well. If I can get back with my Internet Explorer, or when I couldn't find my expert advisor, I kind of hid the question. So let's go ahead and Microsoft. Google's pretty big these days. Now with Reuters, if there's a couple, you'll notice I have .o, and I should kind of mention exactly what I'm doing with the .o. .o will give you the whole consolidated, all of the trades on the NASDAQ. So all of the overnight trades as well as all of the trades. If I did like OQ, for example, it would just give me NASDAQ only trades. So that's why I'm doing .o, is I want all of the trade activity. You could do either one that you want. I'm going to go ahead and click on Next here, and I'm going to set up the parameters for our back test. Okay, so I can say, okay, I want to take long and short trades. I'm going to leave that at both. I can say, okay, I want to go back, and with Reuters, you could go back into the 80s on most stocks, the 70s on some futures. You can go back pretty much as far as you want to. Again, it takes more time to test more data. I want to kind of keep things a little bit fast. What I want to teach you is what to look for, not how to look for it. So I'm going to leave that at about 1 year, which is 250 bars of data. And I'm going to have it test daily. I could say, okay, well, I want to test the hourly charts or the weekly, monthly, quarterly charts, that kind of stuff. You can leave that for whatever you want. Now, it does cost money to trade. So basically what I'm going to do is I'm going to say, okay, how do I want to perform this test? And there's a lot of different ways that you can do this. So let me walk you through some of the options so you understand what's going on. First of all, if I just click on this points-only test, what it's going to do is it's going to figure out exactly how many points you'd be up or down. So in this example here, if we bought 80 and we bought at 84, that's a net profit of 4 points. The next price would have probably lost us 1 point. We'd be up 3 points. And it would just go through the whole system universe and tell us exactly which one works well for that particular option. I'm going to go ahead and uncheck, and what I'm going to say is I'm going to trade $10,000. This is the amount of money that I have in my trading account. Okay, in this case, in my hypothetical trading account. In terms of default size, how do I want to trade? If I get a signal, do I want to take 75 shares at a time? Then in that case, I'd say number of units, 75 shares. If I wanted to do like based on a transaction cost, if I put like $750 in here, what it would do is it would buy enough Apple stocks to get to $750 or 7,500 or whatever size that you wanted to go to. And then the other option is percent of available equity. So I'm going to put that as 75, and that just means that when we start our initial test to compare the different trading systems, what we're going to do is we're going to trade 75% of the equity we have. So our first trade is always going to be $7,500, and the software will automatically calculate how many shares it would buy to get to $7,500, and then buy that many. Now, as we grow our account, it's always going to be 75% of what we have. So if we grow that up to 20,000, then all of a sudden you're going to be trading that. So it allows you to test it with compound returns. You may like that, you may not like that. There's arguments on either side. The point is you can do it. On the brokerage side here, what I'm going to say is $5 to get in and $5 to get out. It does cost money to trade. It should be factored into your business plan. And it will affect your results for sure. I mean, if you have a system that's trading 200 times, you're going to pay them a lot more commissions than if you're trading a system that trades 6 times a year, right? So you need to factor that in, and we can do that. I'm just going to put in the commissions here. Under trade execution, what I'm going to say is realistic market prices. Okay, so if we come back, and what that means is the software will always wait till the close of the bar to make sure that it had the cross. In other words, in this example, if the price would have moved really strong against us, that cross would have never happened on that bar. So to make it realistic, what the software does is it waits till the close of the bar. And since you can't buy on that bar anymore, it's closed, it'll pick up a position on the beginning or the open of the next trading day. Now, with MetaStock and MetaStock Pro, you actually do have the ability to go in and look at the market during the day. So if you wanted to kind of, or you might want to say, well, okay, I'm trading an hourly bar. What I want to do is I want to wait till 55 minutes into that hour. If I get a signal, I'm going to exercise it. In that particular case, because you want to keep it realistic, what you would do is take out the realistic market prices here and just say, okay, I want to delay 0 bars and I want to buy and sell on the close. And you just set that option. The important thing is to match it up with what you plan on doing. You want to test your strategies the way you're actually going to execute them as close as possible. So I'm going to leave realistic market prices checked here. I'm going to go ahead and click on OK, and then I'm going to start that basket test. Okay, and so we're going to do 120 tests. Okay, that's a relatively small test compared to the ones I've been running. So, and it's already done. So what it's done is it's taken those 4 or 5 stocks that I picked and those 40 or so, or maybe 20, 30 systems that I selected, and it tested them all to tell us which one worked best over time. Okay, because we had more stocks in the basket, the numbers that we're looking at here are averages. Okay, so what I'm going to do here is I'm going to sort it based on the average net profit. Okay, our best performing stock, or our best performing system on the basket of stocks that we selected had an average net profit last year of about $1,100, which is 11%. The best that it performed was about 2,481, with the lowest performer being 493. 18 trades in a year. Okay, so what that means is just more than 1 trade a month on that particular system. Again, how much time do you want to devote to trading? Do you want to be trading 5 times a month, which is what this oscillator would do? Or do you want to be trading about 1 or 2 times a month? Depends on how much time you have. In my case, I don't like to trade really that frequently. I'd rather get in once or twice a month. I just work too hard and I have too many kids, and that's about the time I can focus on it. So in this particular case, this Stochastic RSI is looking okay for me. I like the spread between the best profit and the worst profit. I like about how often it's trading. And the other thing that I like right here, it says your average trade profit versus our average trade loss. And what that means is for our win-loss ratio on this particular system is 12.3 to 6.3, which is great because, and that's on average across the whole basket of stocks. What that means is for every 12 times I win, there's 6 losers, which is pretty much better than a 2-to-1 batting average. So I kind of like that. This is our average profit versus average loss column. How much am I winning versus how much am I losing? In this case, every time we lose $1 in the market, on our profitable trades, we gain $1.31. So we can kind of see here, there's a couple things that we kind of focus on here. Again, if you're new to trading, you want to focus on what's working in the market, so we can do that. You want to focus on the indicators that are working, when we can do that, and not on the stuff that's not working. So in this particular case, the systems that I'd give particular scrutiny to are the Stochastic RSI, the Shandy Forecast Oscillator, and the long term. Out of those 3, just as a quick glance, I like actually Stochastic RSI. It made more money and it worked less, 18 trades out of instead of 22 or 26. So that's probably the system I would look at a little bit closer. So let me go ahead and do that. I'll just click on View on the chart. Here we've got the charts. Or here we've got remember we tested a basket, so we were looking at average numbers there. Now we're looking at which ones actually work. Okay, and again, when you're talking about performance, you have averages that pull down your average performance, and you have averages that push up your performance. Again, what we want to do as traders is we want to focus on what's working and what stocks it's working on. Okay, so if I would have tested all of the 4,301 optionable stocks, or however number that is, I'd actually have 4,300 charts right here. But since we did 4, we kind of have a performance for those 4 stocks. What I'm going to do now is I'm just going to sort them by net profit. So it obviously performed best on Apple. Next Google, next Microsoft, next IBM. We'd never want to trade this particular indicator system with IBM because it doesn't work. But Apple it worked very, very well with. Over that 1-year test period that we did, we made approximately $2,481, which was a 24% gain. We had 24 trades, so going back to the math, there's about 12 months in a year here in Utah. It's probably the same for you. But that's about 2 trades a month. So that's relatively something that would match well with kind of the style that I'd want to trade with. Our wins versus our losses on Apple was 19 wins to 5 losses. So I would say that this is something that would merit looking at a little bit closer. Okay, here we've got Google. It only traded about 14 trades. The profit went from 24% to 14%, so I'd probably stick with Apple in this case, right? Or Microsoft, it traded a little bit less, but the gain percentage is about 15 points lower. So again, what we want to do in life, as well as in trading, is focus on those methods that actually work and that work over time. I'm going really fast today. I just realized it's 9:28. So anyway, but that's great. If I want to look if I wanted to just look at any of these performances, how they performed against all of the stocks. So in other words, if I'm looking at Apple right now with the Stochastic RSI, if I click on this View All Results, it's actually going to show me just the results for Apple. So when I sort that, I can see that across that Apple instrument, Stochastic RSI was the best performing system, followed by the Chandy for forecast oscillator, followed by the pattern trading system 1. And what I'm going to do is I'll actually show you how to learn about the rules, but we're going to kind of finish up looking at the performance results and what's important to look like and that kind of stuff. I do like this PS Stochastic RSI still the best. The other ones that are in there had us working harder for less money. Those are things that I don't want to do. So what I want to do is I want to go in and kind of look a little bit closer at that. To do this, what I'm going to do is I'm going to click on View right here. Okay. This is the PS Stochastic RSI, and there's a few things on this report. I'm not going to go through all of the report with you, just the things that I think are critical when you're evaluating a trading methodology. And with MetaStock, again, if I just click on that Help button, it's going to give you a summarized performance of what all of these things mean. So if we look at risk-reward index, just to give an example, this index compares risk to reward. In this index, risk is defined as the system open drawdown, the lowest point, the equity line below the initial investment. Reward is defined as total net points in the final point on the equity line. So what this is comparing is how much you're risking versus what your final reward is. And you can kind of, this is obviously, they have a summary on every item on this report. And you should probably spend a few minutes kind of looking at this and familiarizing yourself with them. But the things that I think are important for you to look at is obviously performance is going to be a factor. In this particular case, the performance on the RSI is 24.81%. Annualized, it was just short of a year that we tested. Annualized, that would be about 25%. Now, we would have been better, as opposed to trading this system, we would have actually been better buying this stock at the beginning of the year because we would have actually outperformed. We would have gotten 33% performance out of Apple last year if we would have bought exactly that day. But I don't like buy and hold because it never gives you a strategy to get out. And with Apple, Apple is a great investment right now. I don't care where you bought it at because of where it's trading, unless maybe you bought it at 103 or 104. But you need to have set up rules. This is where I'm buying into the stock. This is how I'm going to take profits on the stock. This is where my exits are going to be if my trades. Because a lot of stocks, and Apple is a great example, will go up and up and up and up. Eventually you're going to want to take profits on that. And as Apple has proved, it has the same ability to go down as it has to go up. So the ability to, for us, if we did a larger test period, we'd probably have a different buy and hold performance. And we would have a different stochastic RSI performance as well. But what you want is you want a sound strategy for this is why I'm buying the stock. It's based on these rules. This is when I'm going to get out of the trade. Because if you're buying based on emotion and greed and fear, those are your worst enemies. You need to have a trading plan established for trading. And so that's what really kind of, I get a little bit on the soapbox when I talk about this, but I think it's so important in the marketplace. Our total trades were 24 trades over the course of the 2 years, or the 1 year test period. Total of those were 19 that were profitable. So we had 5 losers. 12 of those were betting Apple would go up that made money. 7 of those were trades that we were betting Apple would go down, and it did. So on average, our average profit every time we took a trade was about $165. Our highest profit was about $481, and our lowest profit was $2.19. Yes, supersize it that day. Our most consecutive winning trades, and I don't put nearly as much importance on this as our most consecutive losing trades, was 11. But I could win 15 or 20 or 30 times in a row. That's fine. Believe me, that's definitely performance that I can do. Am I willing to take 10 or 15 or 20 trades in a row, even though I know that one of them is going to be profitable? In this case, with this particular system, and again, it's about finding something that works for us. But in this particular case, using Stochastic RSI, we would have had 1 losing trade. Our average loss was $133. So we're not quite where where I would want to see the profit versus the loss on the averages, but we make that up on 19 versus 5. I like to see a little bit more of like a 2-to-1 ratio there. It's acceptable, but again, we're talking about what we would be wanting to find. Those are kind of the important things that I like to look at: average, profitable versus unprofitable, and then most consecutive losses. I don't care about most consecutive wins as much as I care about most consecutive losses. We have all kinds of things about trade efficiency and unprofitable trade lanes, those kind of things that you can look at, how many commissions we paid. We didn't trade that much on this system, so we only paid $240 in commissions. Again, that number would go up if we actually trade a lot more heavily. There's a couple of other tabs that we'll focus on here. I'm not going to, the orders just lists out where you would have bought and sold, positions, kind of gives you kind of the same view but in a position by position statement. The one that I want to look at is this equity statement right here. Okay, and this is our hypothetical equity account. And I do spend a lot of time looking at this. Number one, what I want to see is kind of like our overall equity growth over time, which in this particular stock is pretty good. Number two, and this isn't evident on this stock, or on this particular system, but what I do like to see is I like to see stocks that kind of go up, flatten out for a long period of time, and then they go up and they flatten out for a long period of time, because that's a measurement of efficiency. I can tell you by looking at this equity curve alone, the equity curve is always fluctuating. So based on these trading parameters, we're always either going to be betting Apple's going to go up or bet Apple's going to go down. I like to see stocks that actually have a lot of period out of the market because it's more efficient. And the best way I can describe efficiency for those of you that aren't familiar with the concept is in several hours I'm going to get on the freeway and I'm going to drive home. My wife hopes it'll probably be earlier than that is, in all honesty. She probably hopes I come home a little bit early because I was here late last night, I was here late the night before, and I work a lot, but it's a workaholic ethic. When I get in the freeway, on general, if there's no traffic and I fly home, I'm going to get there in about 30 minutes. If traffic is like it was last night, it actually took me longer than ever. I set a record for getting home. I still got home. I got to the same place I was going, but it took me an hour and a half to get home last night. Now, efficiency is very much the same measurement. If we're looking at something, an equity curve that gets us to 12,500 and looks like this, we know we're always on the road driving, which means our money's always at risk. If I find an equity curve, and there's plenty of systems in MetaStock that'll do this, that is out of the market for long periods of time and have flat equity, those are systems that I generally tend to prefer, because if I'm only in the market for like 5 or 6 days, I get out for a profit, and then I'm not in the market for a long time, at least I'm not using, at the very minimum, my money isn't at risk. And the other thing is I could be trading that money somewhere else where I'm making more money. So, and that's a whole concept of efficiency. How long are you in the market, and how efficiently are you making money is one thing a lot of traders overlook, but it's a very important concept, and it's something that I would encourage you to kind of look at. Anyway, so let's go ahead and kind of jump to the assumption that we really like the stochastic RSI system, okay, but we don't know anything about it. So the question then becomes okay, well, remember we wanted to kind of use this. I wouldn't recommend you go start taking trades with stochastic RSI and attach like the expert. You certainly could. But again, the ability for us as traders to define our business plan and test it without risking any money is second to none. We could go in and, okay, what I want to do next is I want to learn about the rules. Then after I know the rules, I want to take a few trades on paper. And then what I usually do is stage into the trading. In other words, there's a methodology that I'm using on Dow that works really, really well right now. And I've maybe started picking up this methodology about 5 or 6 months ago. Maybe not quite that long ago, maybe like 4 months ago. I remember I placed my first trade on it when I was in Australia, which was just a few months ago. But what I started to do with that was I would, trading the diamonds, I would start with 13 shares, okay, because that's about as much as I felt comfortable with. It's a brand new system that I felt comfortable with based on my testing. Trade worked out pretty well for a while. I'm up to buying a put or a call when I get the signal to go long or short. And this one's working really well. I'm currently in a short position on Dow as a put position that I've been in for a while. And the next time I take a trade, because the performance is there, I'm going to go larger. So I'm basically, I can ease into. As a new trader with a new methodology, you can ease into and take exactly as much risk as you want. And you don't necessarily, and I would never recommend you bet the entire farm on a single trade. Robert Dill said it best, and I'm getting a little off topic, but Robert Dill used to he was a great speaker, but he'd say, there's old traders and there's bold traders, but there's no old bold traders. And I'm sure you might have heard that, you may not have. But stay conservative, because it is totally possible for you to win 10 times in a row and lose all of your money on trade 11. What you want to do is you want to get something that's consistent, that's a plan that works over time. Okay, so let me get off that tangent. Let's say what's the next step in our process. We've decided that stochastic RSI is something we want to learn about for trading with Apple. How do I learn about what the stochastic RSI is? And that's kind of the question that we want to ask. Okay, what's the next step? Okay, so what I'm going to do is I'm going to go ahead and plot this on my Apple chart just by clicking on this Plot on Chart button. And I'm just going to close this down, and you'll notice that it's put all the buy and sell. Actually, I'm going to clean up this chart a little bit. Just take off the expert advisor for the MACD, take off the MACD too, just to kind of give you a clear view. And here I've got that performance equity that we saw. We have all of our buy and sell signals plotted on the chart for us, so we can kind of go in and look at how this would have performed right now. Based on it, we'd be short in Apple. And we can kind of go in and say, oh, no, this was a pretty good one. This one would have been one of our 5 losers, and it lost for quite a bit of money. And we can kind of develop more of comfort. if we want to go to the next step in our process about learning about the indicator, we're going to go back to the Expert Advisor. So what I'm going to do here is I'm going to click on the Expert Advisor. I'm going to go down to that Stochastic RSI system that we tested and found because it worked really well. I'm going to attach that to the chart. I'm going to go ahead and click on Close. And now it's going to give us the buy and sell signals on the chart. I'm going to clean off the ones that are down there on the system tester. Just so we can have a cleaner chart. And now we can see when we would have been short, when we would have been long, when we would have been short, when we would have been long. We can, again, develop either more comfort or decide this isn't something we want to use. I'm not telling you to trade Stochastic RSI with Apple. I don't. So what I'm going to, now what I want to do is what is Stochastic RSI? Just like we learned about the MACD earlier, I want to know what's driving my decisions. And to do that, what I'm going to do is I'm going to go back into the Expert Advisor. I'm going to open up what we call a commentary window, which also opened up on this other screen, but that's okay. I'll move it over here. And I'm just going to dock it on this side. This is a floating window, so I can move it. And when I do that, let me just adjust my view a little bit. It gets a little messed up sometimes when I'm in a webinar room. When I do that, it's actually going to say, okay, here is the bar it's analyzing. So it analyzes the bar that you tell it to look at. In this case, it's analyzing. It'll always start by analyzing the last day. There's not a buy or a sell signal today. So it basically tells us that. There's no trading signals that exist today. However, Trushar, Shanley, and Stanley Kroll developed the Stochastic RSI indicator. One of the problems with using RSI as an overbought, oversold indicator is that blah, blah, blah. So it's telling us what it's used. It's combining stochastics and RSI. Now, if I wanted to learn more about that, I could read about in the help manuals, or I could Google it, stochastics and RSI. The other thing that it says that is important is it says, as with all overbought, oversold indicators and systems, even though it can be very good at capturing profits on a large number of trades, no real protection I can't even read this morning. Mechanism has been put in place if the trade immediately moves against you. Stop loss orders should be used to prevent the few failing trades from removing the acquired profits. And I think that's important. It's giving you some advice here. The other thing that I think is important, and I'll show you in a second, if I click on this on a buy day, it's actually going to give you specific instructions on what to do. So I move it back to here where it told us to go short, and it's going to say if you're in a long position, exit the long position, well, with a market on close order. If you're trading a short position, then you should enter short either on the market on close or tomorrow's open. So it's telling you exactly how you would trade with that indicator. Now, the thing that I want to go back to, and I have a few minutes to do this, as with all overbought and oversold indicators, even though this can be good at capturing profits on a large number of trades, there's no protection mechanism. My argument to you is if you want to put in a stop, it's a great idea to put in a stop. The other thing that we want to be able to do is we want to be able to test that stop specifically to see how that performance is affected. If we put in a stop that's too close, we're just going to get whipsawed down during normal market activity, and if we do one that's far away, we're going to be risking too much money. So what we want to be able to do is we want to be able to test and maybe find a sweet spot for that. And to do that, let me just go ahead. I'm getting a bit of a reminder that I need to hurry. I go back into the system tester, and this was the Stochastic RSI system. If I want to test how it would work with stops, it's actually really easy. I'm going to find the system in my list. I click on this edit button here, and again, they keep coming on this main window. Pull it over here. Right here, there's a button that says stop. So if I wanted to put in like a trailing stop, I just say, okay, put in a trailing stop. And what I want you to do is I want you to risk 10% of my profit, or 10 points of my profit, depending on which option is selected here. And I want you to wait for 5 or 10 days before you kick that in. We can also put in inactivity stops. If you get bored because the stock's not moving enough and you want to get in another trade, you can test that as well. You can also do profit targets, maximum loss, or break even. And then the nice thing is then you can actually go in and add that to your test to see how, because it is going to affect your bottom line. The thing that most traders don't understand, or that a lot of traders, I shouldn't say most, When you generalize, you generally lie. But a lot of traders don't understand until they put in a stop loss for a while that putting in a stop loss can be counterintuitive. In other words, sometimes the stock will naturally pull back 5%. You stop out, and then it goes on to rise. So we want to be able to test and have a really good idea of how that's going to have an impact on our market. And that's very, very easy to do. Come in here, put in the stops you want to test it, see if your percent performance goes up from 33% like it did on this stock, or if it goes down. And we won't run that test now. I'm running up to the last 10 minutes. I want to give you guys some time to answer questions. But that's the mentality that you're using again. And I talk to traders all the time. When you go into trading, if you're new to trading, you want to treat it like a business. So many people come in here, and the statistics are brutal. 80% of people fail when they start trading. The ones that fail more heavily are going to be people that are kind of over-leveraging themselves and things like that. You want to treat it as a business. So many people don't do that. They'll spend 8 years going to education so they can learn how to be a doctor, but then they just say, okay, well, I'm going to go in and manage my money, and I'm just going to bet that Apple's going to go up today. And I'm guilty of that last month. It did go up. I didn't get out, and I had no strategy around it. You want to keep a strategy. You can take those lottery tickets. Make sure you're not betting the farm on them. And the majority of the trades that you do should be based in a plan. It's okay if you want to buy lottery tickets. I do every time I go to California. That shouldn't be your strategy for growing your wealth. Okay. Now, the one thing that I want to show you, I don't actually want to save the system test for this, because next time I go to do this demo, it'll be testing with stops, and it'll confuse me for a minute. If we find a strategy that we really like, let's say you really know this stochastic RSI, and you wanted to trade it today, obviously you wouldn't be buying Apple with it, or you wouldn't be shorting the Apple with it. The signal has come and gone. There is another tool that's in MetaStock that will allow you to find trades, and we call it the Explorer. With the Explorer, what you can do, I'll just go ahead and open it up right here, is with all of those methods, we could say, okay, well, I want to trade PS Stochastic RSI, or I want to trade the MACD, or whatever it is that you want to be doing. And what I will do is just kind of find the system that I want to go in and test, or find an opportunity for. So I'm going to go Stochastic RSI here next. I'm going to go with, let's find a smaller list. We have to run through this pretty quick. If we go to a smaller list, we'll just do this list right here, this 72 list. You could do the whole market. It doesn't even take very long. I'm just going to look for stocks that have a buy or a sell today on that method. And this quickly, it's going to go through and it's going to evaluate and it's going to find. And instead of looking at, in this case, 72 stocks, I can look at these 5 or 6. So that's another place where we can help you be more effective in the market, is identifying the stocks that actually have an opportunity, so you're not out there arrowing through charts and just wasting a bunch of time finding opportunities. If we like Stochastic RSI system, here we've got a list of the stocks that we could take a long position or a short position on. Okay, I'm going to go ahead and close this, and just kind of talk for a few minutes more, and then we'll open up to whatever questions you've got. Here we go. Oh, that's not what I wanted to go exactly. Okay, we talked a little bit about that. We didn't talk about the forecaster, which is really cool. Don't have time, but we do have a tool that actually will look at event-based things and plot historically probability patterns and clouds. We've got a patent pending on it. It's really, really cool. There's a lot of stuff that MetaStock does. This is kind of not stuff that we'll go through in great detail, but they've added. The nice thing about being our own company and not being owned by Reuters is we've got programmers that are actively working on the program, and so we've been doing a lot of things. The goal when I came in here today was to at least give you some insight into kind of what technical analysis was, what trading with a method and trading with a plan involved, how to look at it and that kind of stuff. The statistics for our customer base are pretty good. 23 years in a row it's been rated #1. The other goal that I wanted to do is I wanted to give you an option to try our software. The vast majority of our traders, when they fill out our surveys at the end of the year, say they're more successful trading. It's by far one of I wouldn't trade without it. I'm a little biased. I've been using it for 20 years, but I wouldn't trade without it. And I think you'd feel the same way. The thing with MetaStock is it's a software program. I've seen a lot of programs come and go over the years. Some of them way too expensive, and some of them have been fairly cheap. But the nice thing about MetaStock is it's something that will literally grow with you as a trader. You know, you can go in and you can put together your own scans. You can combine systems. There's just tons of stuff that are available into it. So I want to kind of give you an offer to try the software. You'll like it. If you like it, you'll be able to play with it. You'll be able to keep it. If you don't, I'm giving you a low-risk offer. I know traders love low-risk offers. So here's kind of what we're doing. The MetaStock end-of-day package is $59 a month. It says MetaStock end-of-day on there, but actually we do updates every hour. So even if you have end-of-day, you can go in and look at what the price of the security is doing and towards the end of the market, and that's just included. We didn't start charging extra for it or anything like that. MetaStock plus all the data that you need is going to be $59 per month. And the offer that I'm going to do is I'm going to say if you're willing to give that a try for 1 month, I'm actually going to give you 3 months. This surprises me because I can't believe we're already into October as of this morning. But that literally means if you pay for the month of October, we're going to let you run it till November, through November 1st. You'll pay from October 1st to November 1st. We'll give you to December 1st, and you'll actually be running it through January 1st, which will give you a huge amount of time and downtime during the holidays where you're kind of relaxed and maybe have some time off to really play with the software. The bottom line is if it helps you with your trading, $60 is nothing to pay. If it doesn't help you with your trading, I would say that it's too much to pay. So we're going to give you the option to do that. Our real-time version of MetaStock includes like all of the news and a product that that competes, that's a very institutional level product. It's only $250 a month. And again, the offer is the same. You can play with that till January 1st. If you like it, you can keep it. And most of you are going to like it if we can just convince you to take what we call our extended trial. In addition to that, I understand there's a lot of learning to do with MetaStock, so I'm going to include our advanced training videos for you. These are really great. They talk about a lot of different systems. They talk about how to run system testing. They talk about how to an RMO, which is a phenomenal system, and using fundamentals. I'm just going to throw that. Normally they charge $100 for it. I'm going to include it with your trial. Okay? And so that's the offer. If you have questions, feel free to call one of our guys. They're all here, 800-882-3040. If you want to get your trial started online, feel free to do that. You can do that at metastock.com/Traders Summit 3-for-1. I'm going to do Q&A for about, looks like 20 minutes, so if we have questions, we'll go through them. But if you have questions that we don't cover today, go ahead and email me at jeffrey.gibby@metastock.com, and I'd be happy to answer any questions that you have. Now, let me figure out how to get the questions back. When I was going through the presentation, I hit them, so let me just pull those back. Oh, wow, it says there's 137 questions. Normally I try and go through the questions as we go, but let's see. Let's see what we've got here. Let me see if I can find where those questions hid. View questions. Okay, got them. Oh, John. Okay, so we're just going to start. Gary and I have been working. Gary, hi. I wanted to say hi to Gary Burton. Pretty sure I know who you are. I noticed you were in there earlier. Gary's a friend of mine from Australia that does some really cool work on some stuff we're developing out for MetaStock. Appreciate your comment today, Gary. John asked a question, but then he left. What time frame are you on? Everything we worked with today was on daily charts. I normally do daily charts. You can do the same work on hourly or 30 minutes or 60 minutes. Or, well, if you have MetaStock Pro, you can do any time frame that you want. If you do MetaStock end of day, you can do like daily, weekly, monthly, quarterly, whatever you want there. Shirish asked, does MetaStock offer candlestick charts and Heiken Ashley particularly. We do candlesticks, and we'll have Heiken Ashley shortly, as I understand, are through in. And one thing, I can show you how to do this. We can get back into MetaStock for a minute. One thing that you can do is if you want to change anything that's in the chart, and that includes the line studies, again, what you have to do is just double-click on it. It's so easy to use. We come into candlesticks right here. We click on Apply, and then we've got all of our candlesticks applied. I like the way we display them a little bit, because what we actually do is the traditional fielding candles versus the hollow candles. I just like that display a little bit better. Since I'm showing candlesticks, I'll show you the Candlestick Expert Advisor, because there are a lot of these things that we don't normally, well, there's always going to be stuff. You have to be selective when you start to do a class like this, but we do have a very cool candlestick expert that'll actually come in here and show you where, you know, a doji star is on your chart, or with the big black candles and the big white candles, and actually label those and identify them on the chart. Also, with that expert that we were talking about before, if I click on this doji star, it's actually going to explain exactly what that doji star is. So MetaStock's great if you're new to trading and you want to just learn about different technical approaches, because what it's going to do is it's going to explain those to you as they happen. So in this case, this doji star was also a rising window, where the top of the previous shadow is below the bottom of the current trend. This usually applies a continuation of a bullish trend. In that case, it wasn't a continuation. Well, not yet. I guess it could continue later. But it'll tell you what those are and how they're interpreted and read. The commentary is really going to be, if you're new to trading and you don't really know what you're doing, the things that you'll use most in MetaStock, I would say, are the System Tester #1 and the explanation or the Expert Advisor commentaries as well. RR says Tesla. Sorry, I lost I lost that. Does it work on Forex? Absolutely. We actually we get all of our data from Reuters. They have a hugely very cool Forex feed. It is comprised of, I've heard numbers like, well, I'm just going to say hundreds of banks. I've heard 800, but it has hundreds of banks that actually give you what their pricing is at the current time. So you're not looking at just what your broker is doing. You kind of have a full market view. The test that we did, Gregory, was compounded. Now you can say, was it a straight percent? The question Gregory asked is, when we did the test, was it straight percentage or was it compounded percentage? Well, when we set up the test, we said compound. So we compounded it. We only compounded it for about a year, but when we set up that test and we go through it, if I click on next here and I select the instruments I want to test, it's right here under trade options. If I didn't want it to compound, what I'd say is, okay, well, I always want to trade $7,500. I don't care if I have $100,000. I always trade $7,500. This will avoid that compounding of the equity over time. The other thing you could do is, obviously, number of units is always going to buy the same amount of shares, and it'll do that whether you can afford it or not. So it'll give you a fair an idea of how well it would work just from a performance. And of course, if we just say what's our points win. So those are the options that you've got. We did do compounded to answer your question, and you can do whatever you want.